Hello and welcome to the weekly wraps. This week has once again been a particularly busy one. There's been quite a lot happening in the marketplace. So just in terms of one of the main events this week, of course we did have Fed Yellen semi-annual testimony to Congress. So just in terms of some of the main takeaways, so one of the first comments that was run, which did garner quite a lot of attention, was saying that a change in guidance means that a rate hike could take place at any meeting. So this was a very, very interesting comment, and it did initially see the US dollar spike higher. However, as market participants digested the overall tone of the release, it did become more apparent that really there hasn't actually been too much of a change in Fed policy. So as such, we did see some of these initial moves paired and extended in the opposite direction, with US Treasury soaring above that 128 level. So which was a pretty interesting week for the Fed. So then these comments were then followed up by some rhetoric by Fed's Bullard later in the week, suggesting that the strong dollar isn't actually too much of a concern from the FOMC. And adding to some more hawkish comments we have seen from the Fed this week, slinging their names in the hat, which suggests that the Fed could potentially be nearing the point where they could lift off rates. However, we're not expecting it just yet. And furthermore, for the dollar, yesterday its dollar index was actually up over 1%, quite a substantial move. So that was following on from these comments from Fed's Bullard, as well as the latest US inflation reports, which was relatively strong, particularly on the core reading, which did exceed expectations. A relatively interesting week for the US economy. And on the theme of central banks, it's also been a relatively interesting one for the BOEs. We've had a few speakers, so we have had Forbes, Shafiq, Will and Carney. So some of the usual rhetoric from the likes of Will and Forbes saying that market rate increases could come ahead of market expectations. And this is also echoed by Carney. If you did record on the FT a couple of weeks ago, he did say a similar thing. However, interestingly, Shafiq has also added her name to the hat, echoing this tone, which could potentially suggest that there is somewhat of a shift in the balance on the MPC. So something to watch out for there, but ultimately, we're not expecting rate lift off from the Bank of England anytime soon. I'm still very much a good few months away from that. And furthermore, on the theme of central banks, we've also seen a bit of a busy one for the RBA. So yesterday we did see that Australian capex data, which did fall short of expectations, and has subsequently prompted speculation that the RBA may have to cut again next week. So the likes of JP Morgan, Deutsche Bank and Westpac are all calling for calls for rate cuts next week by the RBA. However, one interesting thing, if you recall the previous meeting, ahead of that meeting, RBA watcher Terry McCrann did call for a rate cut, and this was eventually proved to be correct. However, this time round he's expecting the RBA to stand pat on rates, and they're going to adopt more of a wait and see approach, which echoes something that we did actually see earlier in the week from the Bank of Canada. So it could be something particularly interesting to watch out for next week. But other than that, that's been some of the more main market moving things this week. So that's all from me, and I hope everyone has a fantastic weekend.